super excited to be on the call with us. Come on, let's go, let's go, let's go, let's go. Um, if you're live on Zoom, if you're live on YouTube, let me know, let me know, let me know. Okay, awesome, guys. Awesome, awesome. Okay. I want to welcome everyone to tonight's session. It's always a privilege, connecting with us and discussing opportunities. I mean, building our knowledge in trading. Okay, and what are we doing today? Today's class is going to be pretty short. We are going to continue, round off um, on the trend analysis topic, our topic on trend analysis. We're going to round off on that. Okay, I know we started last week. We got off to a particular point, and then we I think we pretty much did a lot on trend analysis last week, but we're just going to be continuing it this week. That's the point. Okay. Okay. I'm trying to work on my visibility and let me my video is still pretty. Okay, so let's dive right into it. Let's dive right into it, guys. I told us last week that okay, so I told us last week that trend essentially is the direction that the price takes over a period of time. Okay, it can be on you know on an upward direction or downwards direction or sideways direction. So they are basically like three major direction. Price always move upward, or it moves downward, or it moves sideways. And remember, let me just go to the screen and let's okay. Let's see. So yeah, so we really talked about all this last week. Okay. Yeah. So we talked about this last week that guys can either move you know up in an uptrend like this, or in a downward trend like this, or it moves in an upward trend like this, right? And of course, the third movement that you can see price do is for price to give you what you call sideways movement or range. So in this instance, is there's no there's the direction of going neither up not down. So this is the down, this is the uptrend, and of course we have the side, what we call range, sideways movement, meaning that price is, in this scenario, price is neither going up and it's not going down. Okay. So we talked about this. We talked about this last week. So price is neither going up nor is it going down in a sideways movement. So the trend, well, I mean, the other movement is, you see price going up or price going down. So if it's a downtrend, you will see that you are going to have series of high, low, that is gliding downward. Okay. And if you remember what I shared with us last week, I told us that when you have a high, um this is, okay. Sorry guys, my internet disconnected. I was having problem connecting. So I should be back right now. Okay, so we're discussing. I was just doing. Okay, so I was just doing a summary of what we had last week. So I told us last week that when we are talking about trends, there are three movements that we will see the price make. The price will either make an upward movement, or what we call an uptrend or bullish trend, where market gives us series of high and low high, higher low, higher high, higher low, higher high. If you remember, we talked about that. Then we said the second one is a downward movement, or what we call a bearish movement, where price will give us series of high, low, lower high, lower low, lower high, lower low, lower high, lower low. Now the third one is where the market doesn't have a clear direction towards the upside or the downside. So just a sideways movement, market doing something like this, going, not giving you any clear direction. Just we'll call it sideways movement, or we call it range. So if you pick our trend line and you mark out your lows here, you will see that the direction is going upward, and then here is going downward. Isn't it? And then if you pick and you drew this one, you see the market is neither going up and is neither going down. It's just doing a range, or what we call sideways movement, and you can see it in that range. Okay, so if you remember last week, we started talking about if it's a downtrend, you're gonna have series of lows and high, right? So this is a low here, and then you have a series of lows and highs, right? So this is a low level low price level, and this is a high price level. Okay, and then when market after this impulse and market corrected, it corrected into a higher low, what we call higher low. Okay, remember we talked about it, meaning that this low is higher than this low. Then the next, and then what did I tell you? Remember last week, and then I told you that for us to have series of uptrend, we have to see a series of highs that will be broken. Okay, price must you have to see price must break different level of high to for us to have an established upward trend. So we have high there, then we have higher high here. Okay, we have higher high here, and then we have higher low. So we keep having this series of higher high, higher low. Okay, when this higher high is broken again by price, it's gonna give us another higher high, right? We keep on having this series in an uptrend. Okay, so it gives us another higher high, and then once it gives us a higher high, price always have to retrace, and it's going to create another low level called higher low. So we keep having series of higher high, higher low, higher high, higher low, in an uptrend. Okay, so we keep on having those guys there. Let me increase this. Okay, now when it comes to the downtrend, is similarly you're gonna have high, and then you're gonna have lows. So we have high, and then we have low, right? And then for a downtrend to be established, you have to see that the low is broken, okay, by price. So when you have an impulse move from high to low, there has to be a pullback, a correction, or a retracement, as we call it, a pullback. Okay, and that pullback will give us lower high, a high that is lower than the previous high, right? So this high is lower than this high, so that's why we call it lower high. And then this lower high has to break this low to give us a downward series. Do you understand? To give us a downtrend, sorry, a downtrend, to give us a downtrend. So it's gonna go on and break this low and give us this lower low. Okay, meaning that this low is lower than the previous low. Okay, so once it breaks it, it's gonna give us a lower low, and then it's gonna go on and create its own another high, which is also a lower high. Okay, this is the lower high, because why? This high is lower than the previous one. Then you have to see this new low called lower low broken by price. Okay, price has to break it. Once price breaks it, it's going to create another lower low, isn't it? It's going to create another lower low, and then we're going to have this. And then when price pulls back, okay, it's going to create a lower high. Okay, it's going to create a lower high. So we see, so this is the downtrend series. You have high, low, lower high, lower low, lower high, lower low, lower high, lower low. So for this trend, downward trend to continue, a low must be broken, and then by an impulse. So the impulse leg is always from a high to a low, from a high to a low. The pullback leg is always from a low to a high in a downtrend. Okay, so remember we talked about impulse and correction the other day. We talked about impulse, right? I'll do this again. Impulse, this is the impulse leg, and this is the correction. So the impulse is usually uh, longer than the correction. So we have impulse. So in a downtrend, the impulse leg is from a high to low. The correction is from a low to a high, and then this is the low, and this low, if you remember our market structure, it's also called, it is also a support, right? It's also a support. So for this down trend to be valid, we have to have an impulse move that breaks this low to give us a lower low, and then a pullback leg that from a low to a high, that's going to pull back, and then we have to have another impulse move that breaks the low to give us a lower low, and this series will just continue like that. Okay, so there, of course, when we get to the rechart, you will see that it may not be as basic as what I have drawn here, but the truth is the principle is the same. There in the downward trend, there has to always be a low, a high, a low, a high. Now, when there are reversals of trend, you are most likely going to see something like this. So price has been doing in a downtrend there, and then it now comes, and then it goes on. Number one, breaks this trend line, and at the end of the day, breaks this lower high. Once a high is broken, is a signal that the trend might be changing. So in a downtrend, a high is not supposed to be broken. Okay, for continuation of trend. But the moment this high is broken by this move, it's most likely no longer it's no longer a pullback leg. It's likely going to be an impulse leg. So this is supposed to be This is supposed to be lower low, and the lower low is supposed to give us a lower high. But no, what did he give us? He gave us in more what I always call a new high. Why? Because so he gave us. So once we have this, it's no longer a pullback if it breaks the lower high. Okay, if it breaks it, it's no longer a pullback. It means that it's signaling a change in direction of the trend. So this is showing now that is like the market is about to start going bullish. So because now we now have a high and then we have a low. We have a low here. Okay. We have a high and then we have a low. Okay. So, and then given what I told you about the uptrend, for an uptrend to be valid, there has to be a break of a high. Now, this low has broken this high. So what do you think it's going to do? It's going to pull back to give us another impulse leg in an uptrend series. And then, so what we now have is a high, low, higher high, higher low, higher high, higher low. So that is it. Now, let's go and check this out, in, let's just check this out here. Okay, so if you look at my chart right now, let me just pick it from here. You can see market doing this series of, high, low, lower high, lower low, lower high, right? Lower low, lower high, lower low, lower high, lower low, lower high, right? Lower low, right? Lower high, and then we did not have a lower low, right? You see, we didn't have a lower low. But what do we have instead? We have a market that went and broke. What do you call it? Broke our lower high to change the direction of the trend. To change the direction of the trend. Let me just stop here. So this is where we are looking. This is where we are looking at, guys. So these are the move. Low high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? Lower low. So you see how all the lows are being broken. Here, the low was broken by an impulse leg. Here, the low was broken. 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 Now, here, look here. Here, the low was not broken. But what was broken instead? Look at this. This is the high, right? Boom. This is the lower high. The moment it was broken, you see how price broke it, and the trend changed from downtrend, because this is it. Look at the downtrend, right? That's the downtrend there. So the moment that this high was broken, it signaled a change in the direction of the trend. And then we have a new series, high, low, and then look at that, uptrend, isn't it? So if we decide to continue, this trend, we continue and we say this low, higher high, higher low, higher high, higher low. It's supposed to break for another higher high. But look at what it did. It just came, and also it came all the way, boom. Again, just like I said, if you pay attention, look at what has happened again. We have high, low, higher, low, higher, low, higher, low, higher, low, higher high. So you can see how the highs have been broken, right? This high was broken. Okay, this I was okay. There's even this high was broken, and then this high was broken, and then this high was broken, right? And then this eye was not broken. So as long as the eye have been broken, you see that market continue to go up. So this higher high was broken. It pulled back, gave us a higher low. This higher low broke the eye that was created, the higher high that was created, and then it created another higher high, then pulled back. This higher high again was broken, created a higher low. Then this higher low is supposed to for the uptrend to continue. This higher low was supposed to go all the way up and break this higher high. Okay. But instead, what did it do? It did not break it. And it gave us something that signaled that market direction is changing again. Instead, look at what it did. It came higher low, gave us higher high, and gave us a high because it did not break above this one, and then give us a low. And the moment it gave us this low, see the change in trend. It gave us a lower high, gave us a lower low. We have it came back right into it to give us an equal high. Okay, lower low, lower high, lower low, lower high. You know, and then we are here, and it's most likely going to break it. So now look at this. The trend has changed again here. This low was broken, and then when it came down, it gave us a lower high. And then this low here was broken. And when it went up again, it gave us this high. And then eventually we have this low broken. Okay. And then it came down, it broke it, the low, and gave us a pullback, and gave us a higher low. Then we have a lower low here, which was broken. Okay, again, and then by this impulse leg, okay, by this move here, and then we have what again? A lower low here. So and don't forget, I always tell you this, they are also structural, because when we're doing support and resistance, we talked about this thing. So this is like support area. Okay, so but when it comes to trend, we are not talking about support and resistance. We talk more about low high. So this is a lower low. It went up, gave us a what? This lower high, because is this low and is this high rather is lower than this high, so it's a lower high. Now we expect it has broken this. We expect it to break this level very well. When it breaks it, we expect price to move back up. Okay, we expect it to break. If it breaks, then it's probably going to create a lower high and continue its movement to the downside. Okay, and it's probably going to continue, its movement to the downside. It's already broken this lower low. Okay, and then we have this series, downtrend series, continuing. So you can see how we can see the downtrend, uptrend, and what do you call it? How we can identify the change in the trend, the change in direction. Okay, and now quickly, let me also now quickly tell you, how do you trade on trend? Don't forget, as a trader, trend is always your friend. If you identify the trend, it's going to be always your friend. Now, for a buy, once you identify that the trend is bullish, that is, it is upward, you know that you are looking to buy. Don't sell when the price market is bullish. the trend is bullish, when the trend is going up. Okay, don't sell when the trend is going up, and don't buy when the trend is going down. Okay, now look at it. The moment this eye was broken, for you to buy, you're going to wait for this impulse move to be exhausted and wait for the pullback. Okay, it is at the pullback that you buy. Only buy at the pullbacks. Let me quickly put that one here. Okay, so you buy after you buy at the pullbacks. Okay, you buy at the pullbacks. Don't forget, wait for a eye to be broken. So yeah, this eye has to be broken before we can think about. So the moment this move here broke it, this should have been the next place to buy from. We cannot buy here. We cannot buy here, and we cannot buy here because this move here did not break this high. This one did not break this high. Okay, up to here, it is this eventual move that broke this high. So the moment we saw that break, the best place to buy is when it pulls back and is ready to start going up. That's when we buy. So the best place to buy here, and also buy here, buy here. So these are the best places to buy. In the case of a sell, where is the best place to sell? When it does the pullback, to, for a sell, that's the best place to sell. Okay. So in this scenario, sell here. Why? Because this low here has been broken. This low here has been broken. So the moment it broke and it put back, so you sell here. Don't buy. Don't buy in a downtrend. Don't buy in a downtrend. Then this move here broke this low here. Wait for the pullback. Okay. So maybe you could have we could have seen opportunity to buy to sell, sorry, to sell somewhere here, and then it would have gone in profit a bit, then probably come back. But it's all good because you see it eventually played out. Okay, don't forget, we don't always win everything in the market. It's a game of probability. The higher you sell here, why? Because this low was broken and it did a brief pullback, and then gives you opportunity to sell. And then here again, we wait for them. This low was broken, wait for a pullback, and then we sell. Then again, the next place you're going to be selling is when this low is broken and it looks as if it's been broken. But we won't sell now that it is breaking it. We are going to wait for the pullback to occur. The pullback to occur after the break, a clear pullback. So the next place we probably will be selling will be somewhere around there after price comes down, clearly breaking this low and pull it back into, that impulse leg. So it has to pull back into this impulse leg. Once we see that pullback, then we just do our confirmation and then we sell. Okay, so that's how to buy, that's how to sell when it comes to trend analysis, when it comes to trend trading. Don't forget, don't ever buy in the downtrend, and don't ever sell in an uptrend. Now, let's look at the third one quickly, which is this sideways movement. When we see a sideways movement, what should we do? Really, when you see a sideways movement, you don't have anything to do. I tell people you don't buy or sell. You use sideways movement to determine your next move, and you don't trade in a side. Look at this, because market is not giving us a direction. It's not going up. It's not showing an uptrend or downtrend. It's just moving up and down, up and down. So you don't want to start gambling when you trade in a range or in a sideways, movement direction or movement of price. You really don't get a clear position. It's more or less like you are gambling. So what do you do when we see a sideways? We always wait for the sideways to for price to break out of that sideways range, this range now. Okay, when price breaks out of it, that's when it's going to establish its trend, and that's when we can start trading. So we see this sideways movement for a period of time. Eventually it broke downward, and the moment it broke downward, it showed that price is going to continue to go down. So what do we do in the sideways movement? We wait for this break to occur. Excuse me. Wait for this break to occur. So the moment the break occurred, let me use this level. We see, okay, right? We see this. We see this. We see this. This did not really break. So we will choose this. We choose this, and let me just stop here. So the moment it broke out, that's now when we can trade. We see a breakout, a break of support, a break of a low there. So we wait for the pullback and sell here. The next clear break of a low is this guy here. Okay, is this guy here. You see a break of the low and then a pullback, and then this is the next place to pick a sell. Why? Because you can't sell here because the move here did not break. You can only sell here. You can only sell here. Okay, this is the place to sell. Okay, this is the place to sell. We can't sell here. We can't sell here because all these eyes really didn't break the previous low. This is the previous low. And by the time it broke it, that's when we have confidence that, okay, market is going to continue to sell. So this is going to be the next best place to sell. And then when that one give us this low, we wait for the low to also break, and then, wait for the pullback. This is the break. Oh, sorry. This is the break of this low. This is the break. Wait for the pullback. This is the next place to sell, so to say. So this is going to be the next place to sell. This is the way this thing works, okay? Always remember, the rules for trading trend is wait for a break of a structure in the trend, okay? And wait for a pullback before you buy or you sell. So let me just reiterate before I close. So this is going to be the, like, if it's a downtrend, this is going to be like the impulse, and this is going to be the correction. Okay. And if it's a buy, this is going to be like the impulse, and this is going to be like the correction. So, okay. Now we say that if it's a downtrend, don't forget, if it's a downtrend, you have to ensure that there is a break of the low. So this, you have to mark this the low here in the downtrend. So this is the low here. This guy here is my low. So if I'm trading now, I'll have to wait for price to do something like this. Come and break this low. Once it breaks, I'm gonna wait for it to pull back, okay, into this is the impulse leg. Where's the impulse leg? Okay, this is the impulse leg here. This is the impulse leg. This guy is the impulse leg. Okay, so I wait for price to pull back into it, possibly 50%, at least 50% of the impulse leg, or depending on your trading strategy, and then you sell at when you have your confirmation. Okay, and that's it about. Then for a buy, don't forget, you wait for a break of the eye, okay, of the eyes. Wait for the break of the eye. So when you see the eyes is broken, and that's when, so a break of this eye, and then you wait for a pullback. So the pullback, again, like I said, it can be within 50%. It's always good when when you find it within below the 50% of the impulse move. This is the impulse move here. So, but let's say pull back, and then you. So this is the again. This is the impulse leg. Okay, this is the impulse leg, and this is the pullback. So you wait for the pullback, and then you buy. You buy here. So impulse correction, impulse correction. So we are always, when it's in an uptrend, you wait for the break of a high and a retracement into the impulse that breaks that high, and then you buy when you have your confirmation. Okay, so that's how to go about it, guys. So I hope this helps you to understand trend better. We look forward to seeing you in our next module. We just module 5, yes, no, sorry, we are not done with module 4. So in our next class, we'll be looking at zoning. We'll be looking at zoning, okay, guys. So I look forward to seeing you in that particular class where we'll be discussing zones. Okay, so if this video is you find it helpful, don't forget to like it, subscribe, and put on the notification bell to get more notification on our live sessions. So this is me wishing you a wonderful night rest. God bless you.